So I was not thinking about sharing so much of the data that I have because I'm leaving that to my members and the community. But since you've been watching this far, let's just go over that. I just journaled 120 trades and finished with a 40% win rate. However, after analyzing the data using what I learned working in private equity and my master's in AI, I found an 80% win rate setup within this sample. So let's test it on 6 months of price action to see how it performs long term. I'm a money engineer and I work one-on-one with other traders until they get funded and get their first payout, just like all of my previous students. Check the link in the description for more details. So now grab a drink, let's put some chill music and go over some price action. We are at the beginning of 2024. You can see the 2nd of January. And the reason why I'm starting here is because the data that I used to build this strategy was Q4 of 2024, so very recent price action. And in machine learning, there's this concept of the training set, validation set, and testing set. So pretty much, if you want to determine if you just built a good model, you need to test this model on new data that was never seen by the model. So if you're using some data to train the model, then you cannot use the same data to be able to test this model because of course it will perform well because it already seen this data. So pretty much this is what I'm doing here. My training data was Q4 of 2024 and also the entire month of September, so a little bit of Q3 also. But then to test it and see how it's performing on new data, on new trading conditions, on new months, I need to go back in the past much further and test it again. So this is what I will be doing in this series. Every video I will be testing 1 month and then we can see if we can adjust some things. And then we can see how it's performing and if we need to do some adjustments. Alright, so this strategy is based on the highs and lows of the different trading sessions. So what I'm seeing here is that we have the high of the London session. Let's see if the high of the Asian session also was not swept. Yes. So this is not swept also. This is important. We have yesterday's PM session, yesterday's London close. So I'm calling this session the London close. It is from 9:30 to 12 p.m. I'm taking the name of those sessions from Forex. I know it's not ideal, but it's just simpler for me. So I can go over the trading session actually if you want all the details. Let me show you. So we have the Asian session from 7 p.m. to midnight. This is all in New York time, so be careful. Then we have the London session from 2 a.m. to 5 a.m. And then there's the New York AM session. This is what I'm calling it myself. It's from 7 a.m. to 9:30 a.m. And it is right before the equity open at 9:30. This is my pre-market open session, which I call the New York AM session. I know it's a little bit complicated, but bear with me. Then I have actually my trading session, which is from 9:30 a.m. to 12 p.m. So this is actually when I'm trading, and I just call this one the London close session. Then, right after lunch, from 1 p.m. to 4 p.m., I have the New York PM session. And there you have it. I just like to put the highs and lows of all the different sessions. And then right when we get near them, I'm closing in price action. I'm seeing the reaction from them. So let's just see the first day. So we have the pre-market open right there. I have the high in here. Let's get closer to 9:30. So right before 9:30, and I have the low. Let's see if we can sweep either of them. And then I'll go over what are the entries I'm looking at, the different ways that you can enter the market. Alright, so you can see that right before the 9:30 open, it's very important to look at what is happening. And you see that we first went down, slightly went higher, so it's kind of ranging, and then finally we broke down below to sweep the low of this session. Now let's see if we can get some kind of pullback with a nice fair value gap. Yeah, no. You see how we respected this fair value gap and then continued lower. So I'm seeing a lot of momentum to the downside. So I'm not going to go against that. This is not something I'm looking at. And to be honest, I think for this day, I won't have anything else because there are no other levels to the downside. Yeah, we left those equal highs that would have been quite interesting to take out as a potential target, but I don't think we'll see anything today. So to be able to build my strategy, I looked at many different features. I looked at, for instance, the presence of a fair value gap at different time frames. I was curious to know if there was some trading sessions that were more important than others. Maybe a reaction from the Asian session yield more return than a reaction from the London session. Same thing, let's say a reaction from the yesterday's high was maybe more important than a reaction from the New York PM session. So I looked at all of those things in my journal, and I was able to find an 80% win rate based on that. And I built this strategy, which is, to be honest, very, very mechanical. Even my grandma could trade this strategy. It's very mechanical. And I was able to build it using a trading journal, which is a tool that I think every trader absolutely needs. So once again, we have the high and we have the low. At the 9:30 open, we swept the low. Let's see if we get a nice reaction. Yeah, so nice fair value gap that was left right there. But we're very close to the 9:30 open, so there's a lot of volatility at that point. We had a first sweep of the 9:30 open, and then a second sweep of this low. So this shows me that there was enough manipulation. We had the fair value gap right there. We had the breakout structure of this high and this high. So just to make sure that I don't get missed, I'm just going to enter right away. So it might seem like a big stop loss here with a 50-point stop loss, but we have many targets that we can go for. Let's just go with a 1 to 2. Yeah, perfect to the high of the London session. So we could very well see price action go to the London session. If not, it will be simply a losing trade, and then we'll get to the next one. Let's see how it goes. So right away, market execution. Some people could use the fair value gap. It could work well also. So we came back to the fair value gap. So nice reaction right there. Let's see. No, first trade, a stop loss. It's all good. You saw also how we swept the high. We had a nice reaction. We left this fair value gap and continued lower. So maybe it would have been better for me to go where it sell. You can see right there, just like that. But that's something that you need to figure out for yourself. Are you allowing yourself to take a buy and a sell at the same time? At 12 p.m., I'm done trading. But very nice price action right there. So in this case, I would add both this trade, so the trade that I tried to take, this one, and then also this trade right there. You can see how we swept the high of the pre-market open at that point, right there. We came back to it, rejected it a second time, so you can see how important this level is. I really suggest you put those levels in your chart. We left this fair value gap right there, and we had a lot of momentum going down. Once again, I don't think I would wait for a comeback to the fair value gap. It's not always given. Right when this candle closed, I would have entered right there. Stop loss at the high, and then go with a 1 to 2. So in my journal, I'm going to enter those two trades and see if I'm able to learn something from that. And this will help once again for this strategy. Let's go to the next one. And as I'm going through price action, you'll see more and more the steps for this strategy. We have the high, we have those two highs. The high and the low of the Asian session also were swept, so that's important to know. The high of the London session was left untouched, so that's a potential nice target that we can use. And let's just see right before the 9:30 open how it looks. All right, right there we have the new low of the pre-market open. Let's just see now. Okay, so I'm seeing a lot of momentum going up. We see this fair value gap that was left. I kind of missed my entry. I would have liked to enter right away, but I think I'll still go with the entry right there. I'll go like that. So I don't want to cheat with this backtest. This is my fault. I should have waited before moving price action, before moving the next candle, but I would have liked to enter right when this candle closed. I'll just take responsibility and take it from there. Place order, market. Let's just see. We actually went back to the fair value gap, but let's see. Ranging a lot. And we went. So the first target, the high of the pre-market open. So we reached that. We rejected it because this is an important level. Let's see if we get to the high of the London session for my 1 to 2. And there you go. We went to it. See how interesting this is? Clear respect of my level. I'm not doing any magic here. Those are levels that you can objectively see every morning and every day in your chart. Double rejection, clean rejection. If this is your type of setup, once again, you could have went. Right away, we farm 1, 2, 3 fair value gaps. You can enter right away. You can use any of them or enter right when this candle formed. With a 1 to 2. Maybe this is your type of setup. But me personally, this is not what I'm looking for. But nice reaction there. Yeah, beautiful reaction. You see how it's going back and forth using my levels. This is only based on my experience and also based on my data. Yeah, this one went to a 1 to 4. And my take profit will reach straight to my take profit and then reversed. All right, let's go to the next day. And something I've been thinking of lately is maybe considering trading the New York PM session. So I'm still not sure if I'm going to do that, but this is something I've been thinking about. And maybe I'll try to gather some data for the PM session. So let's just do the same process. All right, so I need to delete those 2 levels because they were swept right before the equity open. I only want to consider clean level, untouched level at the 9:30 open. So we're at 9:28. Let's just wait for 2 next candles and then that's it. So the high of the pre-market open was technically this high right there that we swept right away. Let's see if we get some kind of rejection there. Yeah, so we just reached the Asian session. We still have the high of the New York PM, yesterday's New York PM. We have the high, we have yesterday's high also. Yeah, but usually based on my data, at least I saw that taking trades straight from the Asian session has not been working great for my own data. So you can see that we had the fair value gap that was present there. We had this small low that was swept, but this is not something I'm looking at. Yeah, we could have went like that with a 1 to 2, but as I said, taking trades straight from the Asian session has not been working great for me. I'm just going to leave that here so we can see if it works or not. And as I said, as always, if you're gathering data in your journal, even though this is not a trade that you would not take, you still need to add it to your journal because the more data, the better. And then eventually, if you don't like it, you can just filter it out by using different filters and different features that you have in your journal. This is not a trade that I would take. Yeah, see? Went straight to stop loss. So this is another gem that I'm leaving here. Taking trades straight out of the Asian session doesn't yield the best result, based on my data at least. I need to say that I don't have 2,000 trades in my data sample. I only have 114, but out of the 114, actually let's just go over that. I'll show you. So I was not thinking about sharing so much of the data that I have because I'm leaving that to my members and the community. But since you've been watching this far, let's just go over that. So as I said, I am looking at different features in my journal, and one of them is the liquidity levels. And you can see that all of those levels are the different sessions that are presented at the beginning of the video. So as I said, we have the 2 days London session, but I'm also looking at yesterday's London session, and you can see how different they are. 2 days London session, I'm seeing that if I try to take some trades out of the 2 days London session, I'm not seeing a great results, 26% win rate. And once again, this is only based on raw data. My current strategy doesn't only consider raw data, it has many other layers of features and steps that I need before that. But only looking at the raw data, you can see that today's London session and yesterday's London session are behaving very differently. And this is very interesting to see. So the main reason we're looking at this data is to look at the 2 days Asian range. So this is the AR right there. And you can see a 35% win rate. And even if I add many other features to try to bring up the win rate of the Asian range, I'm not able to. So I try not to take any trades from the Asian range. So that's a little gem that I'm leaving here for you. But I don't like the Asian range most of the time. And this is only based on my trading session. Maybe some people have success trading the Asian range during the London session, but this is not what I'm trading here. So once again, this is why it's so important, and this is why I'm working one-on-one with people, is because your strategy is very specific to your own needs, own personality, your own trading time, your own instrument. Even from one instrument to another, maybe the Asian range is not working well on Nasdaq, but the S&P is working well. And this is why, unfortunately, I need to work one-on-one with people. I would love to just make a course that's able to be universal for everybody, but I cannot do that. I need to go and look at the data of each of my students, work with them, see how we can improve, what they should be looking at. This is where my experience comes with my own trading. I've been a swing trader, I've been a day trader, a scalper, and this is how we're able to optimize the trading strategy of different people. But in here, we continued higher. As I said, we saw the Asian range, we continue higher, and then we reached the, what is this level? This is the high of the New York PM session. Even this level, I don't like it to use it too much. Maybe under very specific trading conditions. But even there, I wouldn't like to use it. Even if we get a reaction there. Yeah, we have this fair value gap. We're seeing some consolidation. Those wicks left there, but I'm not going to take it. Yeah, see? We went eventually, if someone would have went there, stop loss there, we went and swept them. So very bullish price action currently. So I don't intend to take any trade for this day. And then we got to the New York PM session. Right before the close, we flipped and then went lower, but this is not something I'm looking to trade. So we just completed 1 week. Let's go to the next. So let's just clean the different levels. All right, so Asian range, very bearish. London session, very bearish. Pre-market open, bullish. And under those conditions, I'm mostly looking to sell at that point. So let's just see. Because I have so many different trading days in my journal that are looking exactly like this one. All right, so we had the high in here that was swept. We also have this level. Let's see what level this is. Yeah, so this is yesterday's PM session. Well, like I said, I don't like this level. I don't plan to take a trade from this level. Let's just see price action still. Okay, now it's getting interesting because we went higher and we swept yesterday's high. So let's just see the type of reaction we get there. Usually yesterday's low and yesterday's high have a good win rate, but we never know. Okay, so once again, we had this fair value gap that we filled up and then rejected with a lot of momentum, and this is showing a lot of bullish momentum. So I'm going to be careful here and see more price action. But taking a sell under those conditions is kind of risky. So I don't think I'll be taking a trade. And we're continuing higher, you see. Bullish momentum continuing. Let's see on the 1 hour where we are. I don't think I'll take any trades during that day. Yeah, as people say, you don't want to catch a falling knife, right? Yeah, we continued higher. All right, that's okay. Next trading day. Let's just clean all the levels that were swept. Okay, so yesterday's price action was clearly bullish. However, the London session and the pre-market session are bearish. So once again, under those conditions, I know now based on my data that I'll be mostly looking to take a buy during that day. And you see, I have my plan even before the trading session is starting. This is a very important step. Even before we're starting the trading session, I'm looking at yesterday's price action. I'm looking at the Asian range, what happened during the Asian session. I'm looking at the London session. I'm seeing that we have both the high and the low of yesterday's price action that are not swept yet. So those could be potential targets in both cases, either for a buy or for a sell. And now I know that I want a bullish setup for that day. So preferably what I would like is a sweep of the low of the pre-market open or a sweep of yesterday's trading session, the session from 9:30 to 12 p.m. Let's see if we can get that. So very rangy day. Okay, so we swept the high, but this is not something I'm planning on trading. But for people who are interested, you can see we just formed a fair value gap. You could go like that with a 1 to 2. But this is not a very high priority based on my data sample at least. Yeah, see, went to stop loss. And I know a lot of people would have taken this trade, even if they had the entry at the fair value gap right there. This would have been the setup for a lot of people because we had a clear displacement. We had those two fair value gap. We had this inverse fair value gap. But I know based on the previous trading session that this was not a good a good setup. And you see that my bias was respected. As I said, I was looking for a bullish trade, but unfortunately, I didn't get the sweep of the low that I was looking at. But my bias was correct. And I know this could seem impressive, but all I'm doing is putting the priorities into my side. I have many trading days which are looking exactly like we're seeing here. In my trading journal, I have 120 trades. So I saw this price action many times. Price action is always repeating itself. You heard about that everywhere, but it's actually very impressive once you journal professionally the market. So once again, to give you like the kind of trading day that we got, super bullish day on Monday, slight pullback on Tuesday, leaving the yesterday's high untouched. And what happened during the trading session? Bullish momentum to sweep the yesterday's high. And this is a typical day that I have in my trading journal. So this is why right before the trading session, I knew that I was looking for a buy. The only step that was missing for this day, for me, was a sweep of this low. So that's unfortunate. If only this wick would have went a little bit lower and then a push higher, I could have taken my trade right after we formed this fair value gap right there. Just like that. Just like that. And then go for a 1 to 2. But even though my bias was perfect, I did not see a setup that fit my rules. Let's just go to the next one. Okay, so we just swept the low of the London session, so this is interesting. Yesterday's price action, bullish once again. Asian range, overall bearish. London session, bullish. Pre-market session, bearish. So mostly I'll be looking for a bullish day. For that day, I would like a quick bullish setup. Preferably, I would like to see the low of the pre-market open swept. And then so we can take a buy. All right. So because my first target, which was the high of the pre-market open, was swept, even if we come back to the low, I won't take the trade because there's less probability now that we go higher because this first target was already swept. My first target would have been this high and then the high of the London session. But now because we already took out my first target, I won't be looking for a trade that day. Even if we come back lower. Yeah, you see? We're coming back lower. And for me, this is a trap. Even if I see the entry criteria that I'm looking at, I won't take the trade. All right, beautiful fair value gap here. And you can use it for an entry or enter right away. Because we also closed above the inverse fair value gap in here for a 1 to 2. Once again, this would be a trade I would add to my journal still. And then I would adjust my strategy if I'm seeing that this is profitable. Yeah, beautiful trade right there. So you see that was a beautiful reaction. We had very low drawdown right there. And we might see price action sweep the high of the London session. Let's see. And then finally we went to the London session. So very interesting. As I said, the only reason I didn't take this trade was because my first target was already swept. But you can see that this did not stop price action to eventually reach there. So kind of frustrating, to be honest. Price went eventually to a 1 to 4. But as I'm adding this type of trades to my trading journal, I might say that it's better maybe for me to always take those setups, even though my first target is already swept. And this is why it's so important, once again, to journal. But my bias was correct. I'm happy for that. Everything went exactly to plan. The low of the pre-market open was swept. We went higher. The only thing that stopped me was this price action right there, which is frustrating. But very happy with the bias and the overall plan. Next day. And you see, once again, I was able to call exactly what would happen during the day. But this did not mean that I would necessarily take a trade. There's a huge difference between those two. And I'm not doing any magic there. And this is only based on the data that I have gathered. And this is why I think it's so important for people to specialize in one asset, one trading setup, especially if you're not profitable yet. You should only focus on one trading setup and one specific instrument. There's no point in going and trying to trade every single thing. And you can see all the experience that I have with NASDAQ. Okay, so let's just look once again at the price action. Yesterday's price action, very bullish. London kind of ranging, but overall bearish. And the pre-market, bearish also. So I would preferably like to see a reaction from the low of the pre-market open. If we reach the New York PM, I don't think I'll take a trade from there because I don't like this session there. But yesterday's low could also be interesting. So if we reach that point and we react from it, I won't take it. But this one and this one are good. Let's see. And you see that I laid out my plan before the trading session. And this is what you should be doing also. So I like the fact that we didn't sweep this high and we left relative equal highs. And this is a weak low that we could come back and sweep. Let's see. All right, so we swept those two lows. But as I said, I don't want to take a trade from this one. So once again, a very small fair value gap. Someone could try to take it here. We didn't really get a break of structure, so this could not fit everyone trading plan, but okay, so this one worked, but this is not something I'm looking to trade. All right, so this is interesting now. So we went to yesterday's low, and let's see if we can get some kind of fair value gap that I can use to enter. Before the lunchtime also. All right, so we're continuing lower. Okay, we're seeing something. Well, let's just see what is this level. Okay, so this level is from 2 days ago. I like the bullish momentum there. Let's just see the displacement, which is another feature I'm studying. If you're familiar with my channel, you know I'm looking at the displacement. 40 points higher with an important fair value gap. I think I'll use it. Yeah, let's just use the open of the fair value gap this time. With a 1 to 2. Place order, let's go with a limit order. And if this doesn't trigger before lunchtime, I'll cancel it. Okay, so this triggered at 11:52. Let's see how it goes. Nice reaction. You can see those candles came back to my level. And nice reaction once again. You see? Nothing complicated. I had my plan before the trading session. I took the trade when I saw my setup, and we had a nice 1 to 2. And we're currently running at 3%. And this is on a 100K account. Imagine if you have like a 200K connected, or even you're max funded with a prop firm like FTMO, which offers 400K. 3% is 12K. You could be done by half of January. And even January is not the best month to trade in. Let's just see how far price goes. Yeah, price is going and continuing higher. And even in my journal, this is also something that I'm studying. You can see if we go back to my journal. I'm also looking at the TP that was reached. So let's just go over that also. Once again, if you've been watching so far, I guess you deserve it. It means a lot to me if you've been watching until this far. All right, so to look at the TP reach, it's important to consider the winning trades, because as you can see here, this doesn't make sense. A 100%, a 97% win rate, a 96% win rate. And if you didn't guess the reason why it's showing those values, is because the way that we need to read that is I had 6 trades that eventually went to 6R. So of course, those trades will be considered a winning trade. Same thing for this one. I had 39 trades that went to 2.5R. So of course, those are also going to be winning trades. So when we're looking at the TP reach, one thing that we need to do is look only at the winning trades. And this is part of one of the modules I'm going over in the course. It's all about trade management, the best way to go break even and take profit. I have a whole section on that. So I only need to look at the winners. So out of my 120 trades, I have 48 winners. And out of the 48 winners, you can see everything that happened there. So I'm studying the different extension fib that price reached. This is very important. I'm looking also at the same time the number of RR that it reached. So out of the 48 trades, 48 of them went to 2R because this is what I consider a winning trade for me. If it goes to at least 2R. 32 of them went to 3R, 18 went to 4R, etc., etc. So when I'm journaling a trade like this one, I always look at how far price is going. So this is 2 p.m. and I always have like a final time that I will stop considering this trade. So for me, the final time is 3:50 or 4 p.m. All right, so this is 4:02. So this is where I will stop studying this trade. And you can see that price went eventually to a 1 to 5.8 when we reach that point at 3 p.m. So in my journal, when I will be studying and adding this trade to my journal, I will write everything that happened with it. So I actually entered right there, right? So we went into a little bit of drawdown, minus 0.5, if I can eye it like that. Then we went at that point, we went to almost 1R, went back down to break even. And then finally we went to 5.8 and we closed at the end of the day at around 5.6, my guess. Something like, not even, 5.3. So all of those information will be added to my journal. And this is what I'm studying here. All right, let's do another day. So currently Friday. I think I'll stop it at that point here because I don't want this video to be like 2 hours long. This will be the final backtested day for this video. And I hope that you like this kind of video. I feel like this is more raw. I'm just going over my own strategy, what I'm looking at, the way I'm able to predict in advance the bias for the day. And this is all based on my trading journal. This is all based on my data. Sometimes I'm wondering what would happen if I would lose, like I get hacked or something and I lose all of my data. Honestly, this would be very, very frustrating because honestly, I think I spent like maybe 500 hours to enter all of my trades. And I'm not exaggerating. This is on top of trading every day. This is on top of running a community, helping students one-on-one, on top of producing those YouTube videos. I'm spending multiple hours a day just journaling. And if something would happen to my data, like, I guess I will have like a small breakdown and then just go back and then redo everything. I guess like, what other choice like do you have? Okay, enough blah blah. So yesterday's price action was bearish. Asian range, very rangy. We swept the low of the Asian range and then we went to the high of the Asian range. So as I said previously, personally, I don't like to trade out of the Asian range directly, but for London traders, this could be interesting. You saw how we reacted right away from the low and then from its high. And then we're now close to the London high. So for this trading session, I would mainly be looking for a bearish setup, either at the yesterday's high, which is the New York AM session, or the yesterday's trading session also, out of those two levels. I would not like to take a trade from this level here, the New York PM. I don't like it. So bearish bias for the day. Okay, nice. So we swept those two levels. I didn't like the New York PM, so I'm happy we swept it before the 930. Let's just get to 929. So we can write the high. So it's right there. Let's just see the open. So this is the open, a lot of wicks. You can see back and forth. And then we had a reaction going down. So I'm seeing a very small fair value gap here, but let's just measure it. Because yes, this is something I'm also studying in my journal. You can see it. Like I'm very OCD with everything. The fair value gap size. I'm actually studying the size of the fair value gap. Because I was thinking, what if there's a correlation between the size of the fair value gap and the reaction from it. So this is something else I'm studying and I'm presenting to my community. So because this is less than 1 point, I won't consider it significant, so I won't take a trade from it. Yeah, and you see that because this was not significant, we respected it twice, but overall it was not very important. But those two levels are of importance for me. I would like to see a reaction there. Let's see if we can get a setup. Okay, nice. Let's see. Very nice. So we have a clear fair value gap. If you're curious about the size, let's see. 6 points, so this is enough for me. To make sure I don't miss this trade, I'll enter right away. Like with experience, I learned that the entry is the least important thing. You just need to get into the trade. Of course, you need to optimize as much as possible your entry. But if you have your bias and every other steps from your trading plan are respected, just enter the trade. You don't need to be very meticulous with it. So I think this is fair. A 1 to 2, 33 points stop loss. Someone could have used the open of the fair value gap. We will see eventually if we get back to it. But personally, I'll just enter right away. This will be a market order. Okay. Yeah, see? If someone was waiting for a comeback to it, well, actually, let's see. But if someone was waiting for a comeback to it, they could maybe be missed with this trade. Yeah, there you go. And we went to lunchtime. See, perfect example. We had this fair value gap that was formed, very important one, that we came back to it. We came back to 50% of it. But if someone was waiting for price action to come back to either of those fair value gaps, they would have been missed. So that's why I learned that it's just better off to enter there. If your bias is great and you have the data that is backing up all of your decisions, then just take the trade. That's it. And now let's just study how far this one goes. I'll go on the 15 minutes so it's faster. I'll just increase that. Okay, and this is the next day. So price eventually went for 1 to 3, so that's good. And then at the end of the day, we closed right there at around 1 to 2 once again. So as I said, I gave you the setup I was looking for before the 9:30 open. I said that I was looking for a bearish setup for the day. I was looking for a reaction at either this high or this high, which I got. I got my fair value gap and I entered right away. And I've set up everything before the 9:30 open. Why? Because in my journal, I have many days that are looking exactly like this one. And if you don't believe me, I'll actually find out in my trading journal, all of the days are looking exactly like this one. Because I'm sure there will be people saying that I was looking in advance at all of the price action of January, and then I could predict everything. Or that I have another screen on the right or on the left that I'm using to be able to predict with so much precision what will happen during the trading session. So let me bring up all of the trading days that were looking exactly like this one. So because you've been watching so far, and I'm very appreciative of that, and I'm hoping you're getting some value out of this video, let's go over actually some trades I have in my journal, and I'm going to show you actually some details about that. But first, let's just look at today's trading session. So as I said, yesterday's session, you can see clearly that it is very bearish, right? We had the high and the low. None of them were swept yet, so that's very important. The Asian range was overall bearish. You can see that the London session also was bearish. The pre-market open was bullish. And then I took a short, right? I was able to find 2 trades out of my 120 trades which looked exactly like this one, or at least they were very similar to this one. Let's look at the first one. Alright, so the first trade that looked very similar to the one I just took during my back test happened on November 11 at 10:10, and you can see it here. So in this case, it was a long setup, but I hope you agree with me that taking a short and taking a long, especially as a day trader, is pretty much the same thing. I could just flip this chart and consider it as a short. And this is actually something I cover in my course. is I'm able to combine both the shorts and the longs to be able to have even more data. Because if I'm considering shorts and longs separately, when it gets to the time where I need to analyze the data and find something, I would be stuck to look at every trading setup as being first a short or a long and then be able to analyze from there. But the way I'm studying my own data is I'm able to combine those two. And this makes a huge difference. And this allows you to have even more data and consider everything at the same time. So I hope I'm clear here or the way that you can use the DXY to kind of predict the Euro USD, even though they're flipped. Those two are flipped charts. But I think I'm getting lost here. I'm going into too much details. You can see that in today's example during the backtest, yesterday's price action was bearish and I took a short. In the journal trade, yesterday's price action was bullish and I took a long. So those two things are similar. In this case, the London session was bullish. You can see that we went higher and then we closed higher than we opened. It was bullish and I took a long. Those two are the same. In this case, we opened at that point and we closed at that point. So the London session was bearish and I took a short. Once again, very similar. You can see that the pre-market session was bullish, very bullish actually in the backtest, and I took a short. So those two were contrary. In my journal trade, we opened at that point, but we closed lower than we opened. And you can see that overall, we started having a lot of bearish momentum. Bearish momentum, and I took a long. Once again, those two are reversed. So you can see that those two trades are very similar. And that's how I was able to pinpoint exactly the moment we would see a reversal. And this is how I was also able to get my bias for the day. So for everybody that are saying that I saw all of the backtested day in advance or I have a screen on my side or whatever, like I hope this gives you enough proof. And then I have another trade which looked similar to the one I took today. And this will be simpler actually to analyze because it was also a short. Once again, yesterday's price action bearish, I took a short. London was bearish, I took a short once again. In here, bearish, short. Pre-market open, bullish, short. Pre-market open, bullish, short. Very similar. The low of the yesterday session was not swept. And you can see that eventually we went and swept it. You can see that actually during this day, I took two trades. The first one, which was a loss, and the second one that was a win. But there's a huge difference between those two. And the people in my community actually knows the difference between those two. But I won't go into too much detail. So if you really like this type of analysis and you're interested in those kind of things, I really suggest that you join us. We have a lot of great members that are doing exactly the same work as I'm doing here. So you can see that this was a successful trade, which looked exactly like the one that I took today. And you can see how similar they are between those two charts. One difference is that the trade that I took during this backtest did not reach yesterday's low as a first target, but it happened here during this trade. All right, so I actually gave much more information about my strategy that I wanted to, but since you've been watching so far, I thought it was kind of fair to just give a little bit more details. So we just finished backtesting 2 weeks and let's just see the data now. Let's just go to analytics. So we took 4 trades, 75% win rate. So very similar to the current win rate that I have in my trading journal. So I like that. We finished with 5%. Imagine if you have 200K, this would be 10K. If you had 400K, this could be 20K. You see that I did not take 20 trades. I only took 4 trades in 2 weeks. So that's 2 trades per week. And I think this is very, very fair. Based on my data, I actually can go over my data in my journal. But you can see, yeah, I like this calendar here. First week, 1 loss, 1 win. We finished the week with 1K. And then second week, 4%, 2 trades, win-win. And I'll show you actually, this is very similar to my own trading data. So if we only look at the trades that are following my plan. So you can see that in September, this is my trading data. In September, I had a 90% win rate with a return of 17K. October, 75% win rate, 10K, 75% win rate, 10K in November. And December, I did not finish to add trades to December yet. I'm missing some trades. But for now, I have a 50% win rate with a return of 1K, which is normal, to be honest. December and January are actually not the best months to trade. If you're able to avoid them, just avoid them. But in here, I'm gathering data. So there's no harm in that. And you can see the number of trades, 10 trades, 8 trades, 8 trades, and 2 trades for now. So this is around 2 trades per week, 2-3 trades per week, which is very, very fair. This is the type of numbers that you want, especially if you're a day trader. You don't want to be entering every single day, and you don't want to be entering 2-3 trades per day, because if you're entering 2 trades per day for a period of 5 days, you're actually putting 10% of your capital at risk. The very worst scenario is that all of them goes to stop loss, right? This is actually a possibility. It's a very small possibility based on your win rate, especially a win rate like this one, but this is still a possibility. So those are the things that you need to think about, and I actually covered them in my course. So in the next video, we'll just continue right away on the 3rd week. If you want to see details of the strategy I'm currently doing, I actually made a video last week showing you one trade live that I took. So you can go and check that out. See you in the next one.